Well, welcome. Jeff's going to continue to let people come in as they join. So this is SJREI, February 2021. Where's the time going? So we are where the deals happen. As we always start out, you are responsible for your own due diligence. And so we encourage you to do research. We don't offer any tax advice or legal advice or endorse anybody, even if they're on our show. We do encourage you to do your own due diligence. So our mission here is to provide education, provide networking, and most importantly, provide you the inspiration to actually go out and invest. We love that you like to learn, but we don't want this just to be edutainment. We want you to actually be investing. So we encourage you to do that. When we polled our attendees, we found that over 78% of our regular attendees have done business together in the room, and they love doing deals. So that's why we say we are where the deals happen. So if you haven't attended for a while or you're not aware, we being Lori Greymont and our team from one of my students have a large development project that we're working on downtown San Jose on West San Carlos. This particular project was brought to me by one of my coaching students. She did the research that I encouraged her to do, and she found one parcel, and we were able to negotiate the entire block. So we have control of an entire block between Boston and Brooklyn on West San Carlos. You probably recognize it as Antique Row. And what we'll be doing in this particular area is assisted living for 3/4 of the building and independent living on the frontage on the West San Carlos area. We'll also have retail shops on the lower level. So there'll be 6 stories and mezzanine on the front, which will have 61 condos along with the retail. The back will be, we're still in our decision-making process, but it will be at least 159 beds for memory care assisted living. Most likely we will do the 7 stories that were allowed and go up to 220 beds of assisted living. We've already submitted the entitlement plans to the city and passed our first round of comments. Everything came back that we are substantially conforming. We had our EIR meeting with the community to basically find out what their concerns were. That all went beautifully. And we have been investigating using modular building on the front. The back portion, the assisted living memory care, will be done as a type 1 construction, which is your concrete steel type construction. But the front is very conducive to us using a modular building, and we've been out talking to different factories, and even tomorrow we're going to go see a particular apartment building getting set from one of the factories that we've been investigating. So it's a great process. We look to be change agents in the street of West San Carlos, and so we'll be sharing that as that comes along. Just to give you high level what this looks like, it's a value add with entitlement. We are offering an investment opportunity. We do have 3 spots left. We have $300,000 remaining for investments if you're interested, $100,000 minimum. And we do expect to exit by 10 of 2022. And because we are running this as a close held LLC, you would have to be approved in order to be accepted. So we do anticipate seeing about a $25 million sales price, which will give us about $5.5 million in net profit, which would translate to about a 17.2 IRR, 1.87 multiple. So what we're doing is we are putting a bottom on there for our investors that the worst case that you would get would be 9% annualized for approximately 24 months, but best case will be the profit. So it's the higher of the 9% or the profit, whichever comes out more. And, you know, some of the things that we're excited about is it's one of the hottest redevelopment areas in high tech. If you're aware, you know, Google's coming in downtown heavy. This project is a signature project. It's an entire block. Both the city staff and city council love what we're doing there because it is bringing the independent living with the assisted living and memory care. And the idea behind that is people like myself who have aging parents that maybe need assisted living. I could live in one of the condos, take care of dad or mom in the assisted living, have them over for dinner, take them back, know that they're taken care of, and that their health is going to be safe. This particular project is short-term, 18 to 24 months. And, you know, we do anticipate double-digit returns. So before we get to our main speaker tonight, I just wanted to share with you, I have the opportunity to talk to a lot of investors, and they call me for one piece or another. So I decided I would share the piece that most people call me about, and it's the funding. You know, a typical deal component, you have to find it, you have to fund it, you have to fix it sometimes you have to fix it, or you add value like we're doing with this one, and then you flip it or sell it. So the number one fear that most people have, and mostly beginners, is how do they make the offer to a seller to buy a property when they don't have the money? Well, you know, it's kind of like if you build it, they will come. It's kind of like that, but the reality is the money is out there. So their main question is, how can I do this? Where do I get the money? First thing to realize is the money is in the money. And what I mean by that is if you were to walk into a room and you were to say, I have $3 million that I need to invest and I need to have it invested by tomorrow, what would happen? All of a sudden you would have a bunch of deals falling at your feet, right? Why is that? Because money is always seeking a place to earn. So if you find a great deal, and I tell my students this all the time, find the great deal, the money will find you, but they don't believe me. But if you think about it, if you have a great deal, the money will find you because the money is always seeking the good deal. So it really is that simple. So money or capital is always searching for the asymmetric reward to risk ratios. Asymmetric meaning they want a better return than the amount of risk, which, you know, real estate is pretty awesome for that. Ignorance is not bliss. We do know people who have lost money in this marketplace. So I just want to share just a little bit about some terminology here. If you are a lender or if you are a borrower, you have two pieces here. There is an ownership deed of trust on the house, but there should also be a lending deed of trust. And this is what I've seen happen to some of the people who've called me up after they've loaned money. They did not have any security because they did not record a deed of trust. And this is an important part of borrowing or lending money. So what you do is you create a note. The note gives you the terms of what you're borrowing and how much and when it's due. And then either on the state, depending on the state that you're in, it's either a mortgage or deed of trust. California is deed of trust. The deed of trust essentially is your security interest in the property. It records your security interest. And so that's what you as the lender want to make sure happens. Okay, the money goes, oops, let me go back to that. The money goes to usually a third party like escrow. Escrow ensures that that deed of trust gets recorded, and then the money is passed through to the borrower or to the seller of the property. Typical loan structures here in California look like this. Somewhere between 68 to 80% is your first mortgage. It could be conventional, it could be hard money, but that's typically what you see. If you're doing hard money and you want to do a rehab, you can almost always get 100% of your rehab funds from your lender, as long as the total is not more than 65% of your after repair value. So sometimes what you have to do is you have to go out and find an equity partner, because you have to come in with some money. And equity partners will oftentimes make up that gap between the 80 and the 100%. And so that's just some of the ways that we see our structures on our deals. So you might ask, all right, where would you find the money to loan if you wanted to loan? Savings, 401k, IRA, home equity lines of credit, credit cards, family, friends, and relatives. You can sell assets. The other thing, it's not on there, is, I'm surprised I didn't put that on there, I'm sorry. The other one that I love is the seller. So most of the deals that I've been doing, all of 2020 and going into 2021, have been seller finance deals. In this hot marketplace, yes, in California, I have been doing seller financing. And part of the reason is, let's imagine somebody gets out all their equity. Where are they going to invest it right now? Where are they going to put it to get any kind of return? I mean, what are we at? 0.005%? I mean, it's crazy what the return is right now, crazy low. And so if I'm offering somebody 5% return on their money, and it's secured on an asset they really know about, then they love it. They love leaving it there. So that's another place to find the money. So I'm going to go over 3 rules. And this is like if you want to be a lender, or if you want to be an ethical borrower, these are the rules that you put in play, right? First of all, always protect your principal. Start out small and be patient. So either you will master your mind or your mind will master you, right? So if you're loaning out some money and you have no peace of mind, like you are stressed out, don't loan out any more money till you get that money back, okay? Peace of mind is worth more than any return you're going to get on your money. Warren Buffett says wealth is transferred from the impatient to the patient. So that means you want to be patient. So start out small, be patient, and get it in writing. That is a key one, because you can have an understanding and somebody else can understand something different. So rule number 2, limit your downside. So you always want to look at what is your reward to what is your risk. For example, let's say you have $100,000 at 12% with 2 points for 6 months. That means that $100,000 would earn $2,000 plus $6,000, or a total of $8,000 for the 6 months, 16% annualized return on investment. So in that type of deal, your money would double in 4.5 years. Now, if you think that sounds awesome, take that and go, how does that feel against the risk of losing 100%? Is that an asymmetric reward? Are you getting more reward to the risk? If it's secured on real estate that has value being forced going up, then it is a good reward for the risk. Okay? Plan against your risks. Invest in things that have got market appreciation, geographical or demographic appreciation. Make sure you know who your partner is. Make sure you understand your collateral, and make sure you understand where in the economy cycle you are. If you fail to plan, you can plan to fail for sure. So the other thing to remember is that you can only control your actions. So make sure that you're focusing on the things that you can control, not trying to control things like the economy, but what can you control in the risk. Leaders anticipate, losers react. Be a leader. And then the third rule is I call seek battle-worn advice. And what I mean by that is seek the advice of people who have been through different economic changes. I mean, geez, okay, I don't know how many people have been through pandemics, but a few of us have been around for some ups and downs in the economy. And there are some things that repeat when we are in unprecedented times, okay? So always seek out third-party advice. Talk to attorneys, CPAs, investors, mentors, and coaches. Find and entertain divergent viewpoints. We are so soft sometimes, like we don't want somebody to challenge us, but you know what? In that challenge, there may be the little bit of nugget that you need that saves your money. Okay, so in that challenge might be your protection from risk. So ask why. Ask why not. Don't be afraid of that viewpoint that's different than yours. Don't be afraid of it. So one of the things you always hear me say is that you're going to pay for your education one way or another. Either you're going to pay for it by borrowing somebody else's, or you're going to pay for it by walking through it on your own. So either you're going to earn it or you're going to learn it. It's much cheaper to learn it, but if you have to earn it, then you'll probably never forget it. Okay, so wisdom is knowing that the first one, learning it from somebody else, is less painful and less expensive. So the 3 rules, if you're going to loan money out or if you're going to borrow money, is always protect your principal, limit your downside, and seek the battle-worn advice. And the last thing I'm going to leave here for you are the 5 gotchas of private lending. First of all, sometimes you get too greedy, and so you invest for that higher return, but the risk is higher, and you have a chance of losing the money. You get too busy, and you don't make sure everything is done appropriately. Let me put these in order here. Sometimes you try to be penny wise, yet pound foolish. Sometimes you're too impatient. And one of the ones that I don't know exactly how to explain, but it's you think people think like you. So when they say something, you think it means the same thing you would mean, but you don't clarify. And that's a big one. So it's really important to talk to people and make sure you understand exactly what they're saying and then put it in writing. So earlier I had mentioned that I love finding my money with my sellers. When I'm working on a property, this particular property, we've already sold it. But I just want to tell you, people are like, oh, you can't do seller financing in California. Well, okay. You can, but if you want to believe you can't, I'll let you believe you can't, okay? This house here, we got seller financing. It's in Cupertino, in one of the hottest neighborhoods of Cupertino. We were able to purchase the house for $1.9 million. It needed an entire new gut, like it had to be gut down to the studs. We didn't have to make any payments until we sold it, and that was sold in 4 months. We only had to release from escrow $25,000 of our escrow deposit, and our team, we only put $250,000. A normal retail repair job on this would have been closer to $500,000, but we were able to get it done. And we listed it the same day we listed it. We got an over ask price. And so the seller was ecstatic because they got more for their sales price because they were able to seller finance us. And we were excited because we didn't have to service the debt on $1.9 million for the 2.5 months it took us to do this deal. All right, Gene, are you here?
I am here. Good to see you.
Good to see you. Let me
Hearing
see.
right about now, I think, somewhere coming up.
All right. Yay. All right. Well, SJREI, you guys are in for a treat. Gene is in one of the masterminds that I belong to, and he is brilliant when it comes to assisted living and getting high value rentals set up. You know, it's one of the things we struggle with here in California is like, how do you make something cash flow? But I'm going to tell you right now, you are in with such a treat with the knowledge, the energy, and the background that Gene brings. So let's all welcome Gene. Yay!
Thank you. That was so nice. And what a great primer you just gave everybody. That was great. But you had more than 3 rules in there. You had about 15 rules.
I'm sure I did.
That's okay. It's all good stuff. So I'm glad you guys are here. And I know some of you know what I do. Some of you aren't quite sure. So I'm going to explain what I do. And at the end, I'll leave plenty of time for questions. So just so you know that we'll have the opportunity to do a little Q&A at the end. I know I just heard somebody say, and I don't know exactly who, but they said they just made an investment in senior housing. I know Lori's building an entire project, which is pretty darn fantastic. I'm going to show you how to do it a little bit differently on a residential setting. So I'm going to jump right into it. What we do is we do residential assisted living. We take single family homes and we convert them into those assisted living homes in a residential setting. We have a group of companies we call the ALFamily. So I own and operate. I invest in projects all over the country, Lori. So let me know if you have available in yours right there. In addition to that, we have a media company. We actually launched a franchise last year as well. So we've got a lot of different things going on. But tonight, what I'm going to share with you obviously is about the residential assisted living. And we were on the cover of Realty 411 recently. And what I really love about this cover, it's the family. Because we have a family-run business. It's not just myself. It's my daughter, Isabel. She is the COO. My daughter, Victoria, is the CFO. My son-in-law is the CMO. And it's not nepotism. These guys are rock stars. They're really, really good. They travel around too, and people are always trying to wean them away. And I'm glad I'm related, so they can't just leave me. That's good. But it's a lot of family involved, and it's, I'm just so proud of them. But we have a lot of people within the group of companies, about 24 people and more, and we're hiring new people in all the time. So we're going to talk about residential assisted living. And really, I want to start with this comment. Why is right now the best time for senior housing? Because, Lori just mentioned it, the whole idea, who thought about a pandemic? Well, nobody is the answer. And the reality is a lot of people have heard things about seniors and nursing homes and dying and problems. But the reality is that there's a lot of people who have now figured out what I've been saying for over 7 years, that smaller is better. Your project is lovely, and I love the fact you're going to build it and get it up, sell it off, and that's great. But there's a lot of people who are in these larger, bigger units, and they figured it out that it's hard to go see mom or dad. They can't get in and see them freely. We're in a residential setting. There's more flexibility. It's home, not home-like, and it's very different. So I'm going to get into the different opportunities on the real estate side as well as the business side. And I always like to start with some graphs and charts. And before I go any farther, do you see my screen properly? Let's just put it that way. There should be a chart on the screen. Good. I just want to make sure I just kind of go right into it. I'm not sure sometimes, so thank you. So in 1960, the demographic chart would look like this: male and female from 0 to 85 plus. And it was kind of this spire that went up to the top. Flash forward 100 years, and that thing has changed dramatically into more of a column. So where there were 10, 12 million people in that 75 plus, there will now be 30 million people in that 75 plus. So the fastest growing demographic, not just in the US, but worldwide, is those seniors. And that's the huge opportunity that we talk about. And with the residential assisted living and the ALFamily, we're disrupting the industry. Just like Uber did with taxis and Airbnb did with hotels, we're doing the same thing with the ALFamily. So to give you another chart, and I like to start off with some charts because if you're like me, I'm a visual learner. I look at this chart, and this is the annual birth rate. And the people that are in assisted living today are not the baby boomers. They're what we call the silent generation. So these people are 80s and 90s. The average age of somebody in an assisted living community is in their mid 80s. But you can see on that chart right there where the average person would be born, with that blue arrow is, that right there is just in a lull, and it's just coming out of that. But then as you go a little bit farther, you see this spike in the chart. And this spike in the chart right here, 1945, 1946, that's the beginning of the baby boom generation. World War II ended, servicemen came home, got busy, had a baby. They said, that was fun, let's do it again. And before you know it, it was just this screaming population build. So that right there is the silver tsunami of seniors that is coming. Now, I use that term because you can't stop a tsunami. And literally, it's like seeing a stock chart 10 years in advance. You know exactly where it is. You know exactly what's going to happen. And it's really just a matter of taking advantage of what is happening. You can't stop it, so we may as well join it. So the baby boomers are not in assisted living. Their parents are or were, but they're next. So this question comes up quite often at the beginning of the year. What's going to happen this year? Well, I think the better question is, not what's going to change, but what's not going to change. And my answer is, mom and dad, they still need help. They still need care. They still need a place to live. So we're going to talk about all the money that you can make, but I want to start with kind of our motto, which is do good and do well. A lot of us who do have money to invest, sometimes we look for investments we can make that will have impact. And when I say impact, I mean something that is good for the world, good for our family, good for society. So I'm going to share with you something where you can do very good and do very, very well. Doing well is the financial side. Doing good is helping society and making things better. Now, for me, my journey began with a phone call. It was my sister, Ann, and she said, Gene, mom fell. And I'm thousands of miles away. My heart is jumping out of my chest. What do you mean mom fell? She said she fell out of bed last night. And as she was trying to get back into bed, she leaned against the footboard and cracked her ribs. She's in the hospital. You've got to get out here. Boy, my heart stopped. I'd never anticipated that. Nobody ever does. But all I could picture was my mom on that floor, and now she's in the hospital. So I got on the plane as quick as I could, and I got out there and I walked through the front door of my mom's house. Now, every time I would walk through that front door, I would get that big, warm, smothering hug. This time there was no answer. I just let myself in. And as I did let myself in, my mom was sitting in a chair in the family room right there. And she just kind of weakly said, hey, how are you? And I went over and I gave her a little kiss on the forehead. And I knew at that moment, everything was different. I had a problem. It wasn't mom. I mean, she's going to live, she's going to do whatever, but I have a problem because I need to take care of her. Now, at that moment in time, I'm very fortunate. I've got 6 brothers and sisters, 7 kids all together. So my 2 sisters really stood up and really said, we'll help. My sister Ann moved in with my mother for a couple of years. Then my mother needed more help. She moved in with my sister Chris. And then eventually she needed more help than just the occasional stop in and say hello. She needed 24-hour care. And that was the time where we started to look for what's out there. And we talked about having in-home caregivers come in. That's currently $24 per hour for an in-home caregiver. That's the national average. It's more or less in different areas. 8 hours a day, 5 days a week, that's $4,000. But you're still watching her at night. You're still taking care of her on the weekend. And we're not trained caregivers. So at some point you start to think to yourself, well, maybe we need to put mom in a home. And as soon as you think it, you say it, you feel guilty, sick to your stomach, but you realize that's the reality. Now, what I just described to you is what happens to millions and millions of people all around our country every single year, where their parents are going into. So we're not just helping the parents, we're helping the kids. Those kids are 50, 60, and they've got moms and dads who need to be taken care of. So that's where my journey began. That was about 10 years ago when she had that fall, but it was 7.5 years ago when I got into the industry directly. Now, this picture right here is one of my favorites because it's my daughter, my granddaughter, and my mom together. It's the only picture of these 3 generations together. My only regret is I'm not in the picture. There is no picture with all 4 generations together. This is the one and only picture that we have of my mom with her great-grandchild. And you notice that belt that she's wearing, that's not a fashion statement from, Ross or Kmart or Macy's or anybody else. That's called the lap belt. That's what you use to help seniors get up and down out of a chair. So mom was at the point where she was getting taken care of in home. We had caregivers coming in. Every time we went to go look for a place to bring mom, it just was disturbing. That's the best way I can put it. It was a large facility, not like yours, Lori. Yours is beautiful. The ones that we had in upstate New York were old and they smelled like neglect the moment you walked through the front door. So that was the moment where I said, well, that's it. I'm going to create the solution. Mom had lived in a home for her entire life, and I don't want to put her in a hotel that feels like a hotel or a converted hospital. So that's where the beginning of my journey in residential assisted living began. So everything I do is pretty much dedicated to my mom, Lori Greymont, for that reason. So I wanted to share that as a place to start. My mother-in-law, my father-in-law, they lived down in Florida. My father-in-law, he was starting to struggle with his health and his mobility and so on. And I was able to say to them, hey, if you ever need or want a place to stay, you're welcome to move into one of our care homes in Arizona. Now, I didn't say come move in my personal home. I said move into our care home. And I want to say this too, if nothing else after tonight, invest in Lori's project, that's great. But if nothing else, do at least one of these residential assisted living homes for yourself, for a loved one, for a family member, so they can move into the master bedroom and live for free and not spend $5,000 or $6,000 or $8,000 a month or more for year after year, basically just sucking up their future inheritance that they were going to pass on to the kids. So if nothing else, do one of these homes for yourself. I guarantee you're going to get involved in this industry one way or the other. It's either the real estate, the business, or both, or you or a family member may be lying in a bed writing a check to somebody who does. So right now you have a choice, so make a good choice. And as we go along, I'm going to share a lot of information with you. Feel free to take notes. And as I said, at the end, I'll stay and answer all those questions for you. But we're going to talk about the best options to participate. Then we'll also talk about the 5 keys to doing this successfully. My journey, I had heard about this as a business 30 years prior, but there was nobody willing to teach me, nobody willing to show me how it was done. The successful people were unwilling. The unsuccessful people will say, I'll show you what I'm doing, but I'm terrible at it, not making money. So I figured it out. I cracked the code, and these 5 keys, I'm going to go through them with you briefly here tonight. In addition to that, some of you are saying, I just want to own the real estate. I don't want to be a part of the business. I don't want to have anything to do with the seniors. Not that you don't love people, I get that. But if you want to be just the real estate provider, getting up to twice the market rent and doing it with a long-term, low-impact tenant, and I don't mean the seniors who are living in the home, and having little or no maintenance and doing that with a single family home, just think about that and look at those items. In your area right now, the real estate is one of the most expensive markets in the entire country, the entire world for that matter. So knowing that, well, if you can get twice the market rent, that would help a lot. If you had a 5-year-long lease instead of a 1-year lease, and if you'd had little or no maintenance, well, that's kind of the holy grail of rental properties when you think about it. So I've been doing real estate for a long time, since I was 18. I just turned 60. This gray beard, I didn't paint it on last night. I earned it, every whisker of it. My first commercial was 25. I've been doing business for a long, long time. I've had 20 plus businesses in the last 40 plus years. I was a professional musician, recording studio, record label, small music school, all of that. In addition to that, I'm a certified financial planner in the US for, well, I'm in my 26th year now, as well as being licensed in Australia. I've literally trained over 300,000 people worldwide, and I've mentored thousands and thousands of people to be successful in business and entrepreneurship and real estate investing. I've written books and hosted radio shows. The books on assisted living and the industry are The Insider's Guide to Investing in Senior Housing. And the latest book last year was The Blueprint: How to Start Your Own Residential Assisted Living Business. Both of those are available on Amazon. Both are #1 bestsellers in Amazon. But in addition to that, one of the things I'm most proud of, I've been married for 35 years to the love of my life. We were dating for many years before that and had a little breakup. By the way, she has a completely different story if you ever talk to her. But we've been married for 35 years now, 4 incredible kids, all of which work for me, work with me. And that's really the better way to say it. They don't work for me, they work with me. They're incredible. In addition to that, I've got 2 grandkids. So that's me on a personal level. I wanted to start with that. The book Rich Dad, Poor Dad and Robert Kiyosaki, I think what he had to share a long, long time ago literally has changed tens of millions of lives worldwide. So I read the book just like many people, and it made me think differently and do things differently. But the first time I met Robert, he came up to me and he said, "Hey, you're the assisted living guy. I've got some questions for you." And my first thought was, whoa, moment of Zen. You're asking me questions? And he said, yeah, Kim, my wife and I, we've got a building. We're looking to convert it into an assisted living facility. What do you think about the location, the pricing, the mix between independent living and assisted living and memory care? And so I consulted with him, and it was a lot of fun. But as you know, Robert's message is all about getting out of the rat race. What do you need to do in order to get out of the rat race? Now, I know if you're in Lori's group right there at the SJREI, you guys are probably pretty successful. You've made money in business and real estate. You probably have money to invest. But when I ask somebody, just like Robert asked me, what's your number? Most people kind of turn their head and say, well, what do you mean? And I, just like Robert, I said, well, what do you mean? He said, how much money do you need on a monthly basis to pay all of your bills? Now, most people in America today, $10,000 a month or less, and they're perfectly fine. Many of us are looking at $15,000 or $20,000 a month. But if you could do that with one single family home, not 10, not 100, not even a beautiful project like the one Lori just shared with you there, but just one single family home, would that be worth learning about? Obviously, the answer is yes. When I caught up with Robert again, it was a year later at his birthday party when he turned 70 years old. And yes, that is my wife photobombing us in the background there. And I asked Robert, I said, how's your project coming? He said, well, we're in the planning phase right now. We're going through the process and so on. Then when I caught up with him again at the New Orleans Investors Conference, we were both speaking. We were in the green room behind the stage. And I said, how are you doing with your project? And his accountant, Tom, was there as well. And he said, great. We just got a loan for $120 million for the project. And in my mind, I thought to myself, man, am I glad I am not competing with Robert Kiyosaki. You know, we live in the same city and he's doing this big, huge project. But here's the deal. I know some of you have seen big projects come to town. The Brookdales, the Sunrises, the Atrias, all the private companies coming out with 159 bed facilities, 200, 300. And you might be thinking, well, that's it. There's no more room for me. No, no, no. Actually, it's a really good thing if you see somebody else building something big like that, because you know that they spent the time, invested the money to find out, are the seniors there? Do they have the money? And they're not going to invest that 25 million or 120 million unless they know that it's a great place for it. So your location selection is actually very easy. Do it right at the end of their driveway with a single family home. They have to fill 200 beds and you're looking to fill 10. So I asked Robert to come to our national convention. We have a national association called the REL National Association. And he said, yes, I would love to speak and share about what I think in assisted living the opportunities are. So it was great to get the time to interview Robert and get to talk with him and so on. And I got a chance to introduce him to my friend, Jonathan Goldsmith. You know Jonathan as the most interesting man in the world with Dos Equis beer. But sitting around and talking to these gentlemen and having a chance to learn from them was pretty special, because Robert's in his 70s. Harry S. Dent Jr., the New York Times bestseller, was there as well. He's in his 60s. Jonathan is in his 80s. And they were all telling me the same thing. You're at the right place at the right time. So that was just confirmation for all of that. So why? Why residential assisted living? Why you? And why right now? I'm going to give you the facts and the figures. You can decide how you're going to participate. But like I said at the beginning, I guarantee that you are. Now, I mentioned that number of $10,000 a month because nationwide, that's enough. Now, San Jose, your $117,000 a year is considered low income, as my research shows. So you're the anomaly. But $10,000 a month from a single family home, for most people, that's plenty. Now, I'm going to show you how to go well above that. You can do more than one. We can do a bigger one, a nicer one. And you also can do it in any market that you want. I always tell people, live where you want to live, but invest where the numbers make sense. I was doing a podcast this morning with a gentleman out of the UK, and real estate is very different there. It's very, very expensive. You think yours is expensive, it's even more up there or out there or over there, over the pond, as they say. But the reality is this works no matter where you are. It's just the prices change. So I'm going to show you where the numbers come from, what is average and what is possible in your area. So the first thing is, let's talk about a single family home. What can you do with it? Well, we could get it under control and wholesale it or hotel it, or we can fix it up and flip it. Make 20, 30, 50, maybe $100,000. Now, I know lots of people in Northern California that are making 200,000, 300,000, 400,000 on flips because the prices are so much higher there. But reality is, after you sell it, you're done. You have to go find another. And you know as well as I, it's getting harder and harder to find good properties at a good price and getting them under control. Every new HGTV show that comes out brings out thousands of newbies into our market. We all know that. So most people start with the quick cash, then in real estate, they move on to the buy and hold. They even coined a phrase, BRRRR, buy it, renovate it, hold it, rent it out, the whole bit. But that is going to produce income, maybe $100 or $200 a month in positive cash flow. Even if you have a large apartment complex, making $100 or $200 a door is pretty much the norm. So in order to get to 10,000, you have to own quite a few homes or at least an entire apartment complex and hope that nobody trashes their apartment or their home on the way out. We all know what that looks like too. So another option is a group home. Rent it out by the room instead of the whole house to one family, rent it out by the bedroom to a group of people. Now we can really increase our cash flow, maybe make $1,000 a month from that single family home, or we could do short-term rentals. We know it as Airbnb and now make a couple of $1,000s a month. But who would have thought they would have shut down Airbnbs for months saying you can't even rent it out? People can't even come in. I mean, that's amazing. I had to cancel 6 different reservations last year for homes that we were renting for $1,000 to $1,500 a night. And I felt bad. I want to go on that trip, whether it was business or pleasure, but they weren't allowing it, or we couldn't do it, or you had to stay for 2 weeks instead of the 1 week. So who knew that that would ever happen? Now, many of those people who were doing short-term rentals are looking at what we're doing and saying, maybe this is what I should do. So what do? We own and operate residential assisted living homes, taking that single family home and creating income after all the expenses, including the real estate, the caregivers, everything, $10,000 a month or more. Wayne Gretzky, the hockey player, was asked the question many times, why are you so good? You're not that big, you're not that tall, you're not that strong, you're not that fast. And his response was simple. I go to where the puck is going, not to where it's been. You know, short sales, foreclosures, REOs were gangbusters 10 years ago. McMansions 8 years ago, mini homes 7 years ago. Today, senior housing. We know that because they have been driving the world's economy for the last 70 years. The baby boomers is what I'm talking about. I've shown you the charts and you know it's the reality. They're like a silver tsunami that's coming. Now, I know that is cringeworthy when some people see that picture, but everything has two sides to the coin. It's either a crisis or an opportunity. It just depends on how you look at it. I look at it as an opportunity. As an entrepreneur, that's what I do. When others are saying no, I say, let's take a look and see how we can make it happen. So I mentioned a couple of facts, and I'm going to give you some more. The actual average cost of somebody living in assisted living has increased 79% since 2004. That's a huge, massive increase. I gave you another number. The average in-home caregiver across the country is $24 an hour. The average price for assisted living in whether it be a big community or single family home is $4,300 per person per month. Now that includes Medicare, Medicaid, which I do not deal with. We do private pay, which is a much higher level, but $4,300. That was an increase of over 6% this past year and 3.6% year after year after year. So the economics work very, very well, and the numbers can be really juicy. So I know at this point, some are saying, Gene, what is residential assisted living? So I'm going to give you a definition to help you understand this. It's a group residence for seniors. So it's not one senior, one home. It's a group of seniors inside that one home. But their activities of daily living are being taken care of. So what's an ADL? It's everything you did after you hit the snooze alarm today. Bathing, eating, dressing, medication management, all of those things. That's part of what's called ADLs, or activities of daily living. Nobody moves into assisted living unless they need help. If they didn't need help, they'd be in independent living. They'd be playing golf and tennis and pickleball. Assisted living is for people who need assistance, but not a nurse and a doctor on 24/7 call. That's a nursing home. That's not what we do. We don't do skilled nursing. We don't do nursing homes. It's in between somebody staying at home and somebody in a nursing home. They need care, but they don't need doctors, nurses, and gurneys. So in your state, California, they call what we do an RCFE. That stands for Residential Care for the Elderly. The old name is Board and Care. So when you hear Board and Care or RCFE, that's Residential Care for the Elderly. Now, it's important to know what it's called because if you were to come to Arizona, they call it something different. If you were to go to Atlanta, Georgia, they call it something different. So there's 20 different names for it across the country. You're the only ones that call it an RCFE. So don't be surprised if you're talking to somebody in Florida and say, hey, I'm doing an RCFE, and they scratch their head and say, what is that? Because there they call it an ALF, an assisted living facility. Where in California, that would be a big box facility. You cannot do that in a neighborhood or in a single family home. So it's important to know what it's called. There's lots of nuance, but I just wanted to make sure you knew what it's called in your state. So when I say senior housing and assisted living, this is the picture that comes to mind. You know, Lori's project is beautiful. It's brand new, but this is the picture that comes to mind, an old hospital that was converted. Again, you walk through the front door and it smells like neglect. Put some barbed wire around the roof and it's a prison. That's not what we do. Or they think of this, the Golden Girls, 4 mature women living together, taking care of each other. No nurses, no caregivers, just 4 ladies living together, co-housing or shared housing. Now, there's a lot of opportunities in shared housing, and you guys know that as well as I do. And you can use the concepts that I teach for shared housing as well. So what we do is right in between those. It is a single family home in a residential setting. You notice a sign in front of this home. That's not usual or common, though. Most neighborhoods don't allow you to have a sign. These homes, as you take a look at these are some of the homes that we owned and operated and created from scratch. One of the things you'll notice that is common is they're single level, ranch style. Doesn't have to be, but then any senior with mobility issues doesn't have to worry about going up a flight of stairs. Now, you can do it in a multi-story building. We have students across the country that are doing that as well. But it's a home, not a hospital. So you see me standing inside one of our homes. It's a very big open floor plan. And that home there is worth valued currently at about 1.5 million, 6,400 square feet in Scottsdale, Arizona. That same home in your area might be $5 or $6 million. So it's all about location. That dictates the price, which dictates the rates that somebody will pay. But the home is a home. You actually not just provide the home, but the furnishings that go with it. So you'll notice there's dining rooms and bedrooms and bathrooms all furnished. That senior comes with some clothing, some personal belongings, but typically not their own furniture. And it's a group home for seniors. So in this picture, you see a lot of seniors. You see mostly women. So why more women than men? Because they're killing us off. No, that's a joke. Lighten up, relax. But statistically, women will outlive men. So if there's a husband and wife, he may pass away, she stays for a year or 5 or 10, and at some point she may need assistance. So typically you'll see 70% of the residents in assisted living are women. Now it's a home, not a hospital. That's why I put this picture up, because they can have a party. They're in bed by 7:15, so it's okay. Now that's O'Doul's, but if they want an alcoholic beverage, as long as they have a note from the doctor, they can do that too. Again, it's a home, and I keep stressing that because the kids who are 50 and 60 years old and the grandkids, they'll come to visit for an hour or an afternoon, but then they leave and go home. The seniors stay in the home. They're taken care of by caregivers, not caretakers. That's a funeral term. Caregivers. They provide care, helping with those activities of daily living. Now we're going to get into the money, how much money you can make, but I first want to share our motto at the REL Academy: do good and do well. So do well, make a lot of money. Doing good, that's helping the community, helping others. And this right here is an example of that. Thank you notes from residents' families saying, thank you for taking care of my mom. Thank you for taking care of dad. And here's a $6,000 check for this month. And they're there for years. So we'll talk more about that, but what do you really want? I think one of the things everybody wants is to be at the right place at the right time. Now, that's not as difficult as it may seem at times. Just like the bear in the river, the fish is jumping right in its mouth. The seniors are coming our way. I'm a baby boomer. Now, God willing, I'm 20, 30 years away from needing assisted living, but The oldest baby boomers, those born in 1946, they're now 74 years old. Some of them are in assisted living, but 8, 10 years from now, they're going to be the prime candidate. They're going to be filling these homes. So timing is key in life. And right now, the timing could not be better for senior housing. The second thing that everybody wants is they want less competition. And if I were sitting in the room with you all there, I'd ask the question, raise your hand when you see something on the screen. And before you know it, everybody's hand would be raised. Single family rentals, wholesale, apartments, vacation, storage units, whatever it may be. And then I'd ask the question, in your case, does anybody own or operate an RCFE? And likely nobody would raise their hand at all, just me. And they'd all look at me and I'd look at them and I'd say, well, how much competition do I have? The answer is very little. Now, you don't need to have a crystal ball to understand these numbers. With 77 million baby boomers, there's an average of 10,000 people a day turning 65. More importantly, there's 4,000 people currently turning 85 every single day. With 30 days in a month, that represents about 1.4 million people turning 85 this year and every year for the next 20 years. Now, I'm not saying all of them will move into assisted living, but hundreds of thousands of them will. And there's no room in the inn. Right now, nationwide, there's about 1.2 million beds in assisted living, whether it be a large community or a single family RCFE, 1.2 million. There is only this year, 2020, there was about 50,000 beds that were built and created in the market. It's projected that 2.3 million beds will be needed by 2029. That means we're 1.1 million beds short, and at 50,000 a year, we're only going to get halfway there. The opportunity is huge. 90% of all seniors, according to a survey done by AARP, would rather stay at home and live out their years there, but 70% are going to need care for an average of 3.5 years. So my crystal ball very clearly says they need a home, they need assistance, and that's the opportunity. Harry S. Dent, my friend, he wrote the book, The Demographic Cliff. His latest book, The 0 Hour, is out. But in this book, New York Times bestseller on page 90, he makes this comment: the opportunity of our lifetime, now that's a big, bold statement, of our lifetime in real estate development and investing is likely to be nursing homes and assisted living facilities. Now, again, I'm not competing with Brookdale and Sunrise. They provide a different experience. What we do is more like a boutique hotel or a boutique restaurant, kind of like the French Laundry that Gavin went to get a nice meal at $300 a head, and very few people can get in. But a big box facility, they may have 300 beds. That's like the buffet at the Sweet Tomatoes restaurant or the OK Corral or whatever it may be. So we're a different product serving the same client. So the common questions that I get are, Gene, I'm not a doctor or a nurse. Can I get into this? Yes. You don't need any background or experience in seniors or healthcare at all. Second, Gene, I have some properties now. Could these be used for the senior housing you're talking about? The answer to that one is maybe, but just because you can doesn't mean you should. This is not the field of dreams. If you build it, they will come. Just like Lori was describing with her project, location, location, location is number one. And it's not mountaintop or oceanfront. It's the demographics of the people that live around. We'll talk a little bit more about that. And then this question, well, how much can I make doing this? Well, we'll go into all the details here. So if you're taking notes, 3 options for you to participate. There's really 2 plays. One's a real estate play and the other one's a business play. So we'll start with the real estate first. Option 1, own that single family home and lease it to an operator. Now, if you're going to do that, the key to your success, pro tip for you, is you're going to find that operator first. Don't get a great house, a big house. I got it cheap. I got it free. It's 7,000 square feet and it's got 14 bedrooms and 14 bathrooms. I don't care if it's in the middle of nowhere, nobody's going to come. Location, we'll come back to that. But the idea of being a preferred real estate provider, we have a lot of students who come through our training program. We train 8 times a year. We see about 800 people come through our classes every year, and many of them don't have the means to buy the real estate. But if somebody like yourself is saying, well, I'd like to buy the real estate and lease it to them, why would they do that? Because they don't know what you know. They don't belong to the SJREI. They don't understand how to buy real estate with no money down and owner financing. You do, they don't. See, most businesses do not own the real estate that they operate out of. Once you understand that, charging them twice the fair market rent, they're making great money. And if it's the right location, it's absolutely worth it to them. Long-term, low-impact tenant. The tenant is the operator, that business entity that's operating that RCFE. The resident who's living there, they're there as a resident. They come and go, but your tenant is the RCFE operator. And then the third one, little or no maintenance, you can have them do all the minor maintenance, let's say $100 or less. Anything above that, do a home warranty policy, say, here's the 800 number, you pay the deductible and they'll fix it. So we can get rid of the maintenance. We can have a long-term tenant, low impact tenant, because the resident who's living there, that senior, is typically not trashing the house. They're living quietly. They're not raising Rottweilers in the back bedroom. They're not dissecting Harley Davidsons in the dining room. So the second play is to own the real estate and operate the business. Now that's what I do. It's what we teach people how to do. But if you're going to do this, there's some things you need to know, and I'm going to spend the bulk of our time on that one. The third is be the money. Just like Lori said, one of the money's in the money. If you want to be a private lender or a joint venture partner, there's a lot of people that are looking for money, and there's even more money out there looking for a partner, but they're looking for good partners. So I'm going to give you the exact person you're looking for in that preferred real estate investment and or preferred real estate provider. I'll show you exactly what you're looking for in a 3-step formula that I put together for you. So as I go into the money, the first thing we have to find out is, well, how much do people pay for assisted living currently? The facts and the figures, the numbers and the dollars I'm going to share with you now come from Genworth. Genworth is a private long-term care insurance company. So genworth.com/cost of care, you can look it up on your own later. But I'm going to start with which states have the highest rates for assisted living. The average in America is $4,300 this year. Last year was $4,051. So it's up, like we said, about 6%. But this right here, and we say, which are the most expensive states in the country, tied at $5,000 is Hawaii, California, and Maryland. Now pause for a moment. I'm going to show you detail in California from the high to the low and everything in between in just a moment. But the reality is, you know as well as I, there's some very expensive areas of California and then some very inexpensive areas. An average is just that, an average. Hawaii is the same thing. Go interior where it's a lot different than the resorts on the ocean front. It's a lot less expensive. Maryland, now Kansas, $5,090, and Vermont, $5,310. Washington State on the West Coast, $5,750. It's crowded there, dense. There's a lot of population there. Maine, notice a lot of these are in the Northeast. In the Northeast, properties tend to be more expensive, taxes are higher, expenses are higher. Connecticut, back in the Northeast. Let's throw one out to Alaska. Why is it more expensive out there? Because everything is more expensive. They have to fly it in or ship it in. Everything is more expensive in Alaska. Let's go back to the Northeast, New Jersey and New Hampshire. But currently, the most expensive state in the union is Delaware at $6,690. Now, I said currently, notice the asterisk right there, because year after year after year on the top of the list is Washington, D.C. They haven't reported this year, but last year they were over $11,000 a month average. So there's people paying 2-3 times that and people paying half that. Now, I'm going to break down it by a state, and we're going to use California as the example because it isn't the same all the way through. It's not just $5,000 all around. It's different in different locations. So let's go with the top ones. Santa Maria at $5,000, San Luis Obispo at $58,000, El Centro at $58.25, and Oxnard at $58.45. San Jose, there you are, at $58.75. Santa Rosa at $6,000, San Francisco at $6,100, Napa at $62.55, Santa Cruz at $6,800, and the most expensive currently, according to Genworth.com, Salinas at $7,100. Now, I'm not even going to go into the bottom end, other than take you all the way down, Stockton at $3,500. So if you love mom, you move her to Napa or Salinas, and if you didn't get along, Stockton, here we come. No, that's not it. If you live in Stockton, you're going to find a place for your mom in Stockton. If you live in Salinas, you're going to find a place for her there. So I guarantee you there's places that are $7,000 in Stockton, and there's probably places in Salinas that are $4,000, but it's an average. So you need to get very specific and local. But I want to just take those numbers and kind of extrapolate that so you understand. Now, first of all, in California, it's called an RCFE, residential care for the elderly, or board and care. Most of those single family residents limit themselves to 6. Now, notice I said limit themselves to 6. The state doesn't impose that limit. They limit themselves to 6. Why is that? Because the zoning, what you need to do to get past the 6, 1, in addition, if you're going to go past the 6, you probably need fire suppression, sprinklers in that single family home. You're probably going to need a bigger home as well. And with 6 people or less, you could have one caregiver taking care of those 6 people. But that's thinking like a mom and pop. And I don't want you to think that way. I want you to think like a business person. So I just want to use the numbers. Let's assume that you have a average home in America, not just California, anywhere America, $4,300 per person per month. Let's say their home has 10 residents, makes for easy math. Some states like Arizona and Nevada, they're limited to 10. Texas is limited to 16. Florida is limited to 21. Many states have no limit. As long as the house is safe and you can get it approved. California, again, a lot of operators limit themselves to 6 to make it easier for themselves, but they're missing out on the big dollars. And you'll see that in just a moment. So let's say you have 4,300 average home, 10 beds, just an average size. By the way, you're saying to yourself, Gene, there's no 10-bedroom homes out there. No, the Brady Bunch was a fictitious family, right? You're going to take a space, a home, and divide it into. You're going to take a big bedroom, make it into 2 bedrooms. You can have 2 people in a bedroom. So that may just be a 5-bedroom home. So 43,000 potential gross income. What are the expenses on the residential setting on an RCFE? Well, it really looks just like your own home budget. When you take a look at that, cable, internet, phone, newspaper, magazine, food and supplies, activities, landscaping. In the middle, we get into the humans, right? The caregivers, the managers. 50%, and that is your max, 50% of the gross income that you bring in is probably going to be spent on caregivers. Now, the more you charge, the lower that percentage. But if you're spending more than 50%, that's too much. It's hard for you to make a profit. So there's a lot of detail to that, but let's bring it down to the bottom line, $28,000 in expenses. And then I'm going to give you another bottom line, $18,000. What's the difference? Not just $10,000. The big difference is doing it yourself, like a mom and pop, living in the home, being the manager, being the caregiver, the cook, the baker, and the candlestick maker, and your expenses are $18,000, or hiring somebody else to be the manager, the caregiver, and doing it like a business. So I'm going to use the $28,000 number here. The next one is the debt service. Now, again, nationwide, the average home in America today is $340,000. The average rent in America today is $1,865 a month, but you're in a different area. 1.1 million is kind of the average, or 1.4. I forget which one. Those 2 numbers are rattling in my head, but it's a lot more expensive, and you all know that. I'm just talking average. That home in America for $340,000, the debt service, the PITI, so principal, interest, taxes, insurance, and expenses, you could rent it for $2,500 a month and positive cash flow it. So let's say you spent twice that, double the rent, because that's what I said. If you want to own the real estate and lease it to somebody, you can even charge twice the rent, and that operator is still making a profit. They're still making that $10,000 a month or $120 a year. Now, that's actually just about twice the household income average in America today. But you guys are not average. So let's take a look at your market. Let's say you had a 6-bed in San Jose. So it might be a 1,500 square foot home. By the way, throughout the country, to have 10 people, the rules and regulations would allow you to do it in maybe an 1,800 square foot house, 2,000 square foot house, and you could have 10 residents in a home in America today. That's not what I want you to do. It's not what I suggest you do. What people look at our homes and say these are upscale or luxury homes, that's more the mindset that I want to encourage you to have. But let's just say you're in your home with an average home and an average rate of $5,875 with just 6 residents. That 6 residents is going to produce potential gross income of $35,250. Now, there's some good news. If you only have 6 residents, we could have 1 caregiver during the day, 1 caregiver at night. It's going to reduce your expenses for caregiving by about 30 to 35%, which is significant. But your expenses, I'm going to lower it a little bit right there because, like I said, we're taking off some of the caregiver expense, but you're going to also be paying a little bit more for that average home there. So let's call it $6,000 a month. That's going to net you $5,000 a month or $60,000 a year. And I'll be honest with you, that looks more like a job. That doesn't excite me at all. And I'm guessing it doesn't excite you either. So if, and I say if, because you don't have to, if you're going to limit yourself to 6 people in a board and care or RCFE, I want you to do at least a little bit nicer. Maybe do memory care instead of just assisted living, where people move in younger, stay there longer, and pay more. $1,000 a month more, $1,500 a month more. So instead of $5,875, let's bring it up to $8,000 a person. Times that same home, just doing memory care a little bit nicer, $48,000 a month in gross income. And let's do the expenses, bring them all the way up to the $28,000, because now we're going to maybe bring on that extra caregiver, and our real estate cost is the same. See, that's one of the unique things about this is the real estate is the real estate. The cost to own it or rent it, it's the same no matter what you charge for the residents. The caregivers get paid the same no matter what you charge the residents. So now your potential monthly net is $14,000 or $168,000 a year. Now that does get me more excited. And if you do 1, you can certainly do more. Now I'm going to go into that in just a bit, but I want you to think bigger and nicer. Let's just say 10 bed. This might be a 3,000 square foot home in your area. Our rule of thumb at the REL Academy is 300 square feet of living space per resident. That's not a 300 square foot bedroom. Take the whole house, 3,000 square foot house. I could comfortably have 10 or 12 residents there. So let's say I'm doing it in California, doing an RCFE, and I've got 10 residents at $8,000 a piece. Now the numbers change dramatically. $80,000 potential gross income. And let's take our expenses and move it up from the $28,000 to $35,000. Maybe we'll add on a chef with a white jacket and a white hat, cook to order breakfast, cook to order lunch, serving gourmet meals all day long, and that the caregivers can serve a gourmet dinner at night. In addition to that, let's up our expense on the real estate side. So $10,000 a month. Even after all of that, and I'm being conservative by boosting up all of those expenses, you're still netting $35,000 or $420,000 a year. And that's from 1 single family RCFE right there in your own backyard. So I wanted to go through that in great detail because I wanted you to see what average America is. And I wanted to see what a 6-bed facility would look like in your area, and then how to do it right. Memory care, upscale, that 8,000, those numbers work. And if we go to the 10 bed, well, those numbers work very, very well. So 5 keys to doing this successfully. And it starts with the number 1, the location, location, location. It's critical to your success. So when I say location, I want to break this down for you. Think level 5 is the nicest homes in your area. Beverly Hills, nicest homes of your city. Level 1, the other side of the tracks. The place you wouldn't slow down the car, let alone drop mom off to live. Now, I don't want you to pick either one of those, level 5 or level 1. The sweet spot for us is level 3 and level 4. That's where there's still a lot of people that can afford that care on a private pay basis. They're not looking for the government to pay for it. That'd be level 1 is what they can afford. And they're not $10,000 a month or more, although your area will have people at that rate for sure. But the price on that you can charge in that level 3, level 4, that sweet spot is that $4,000 to $8,000 per person per month range. So that's where we live. That's what we look at. So Gene, what does a level 2 home look like? Well, it looks like this. Now, this is a level 2 home in a blue collar neighborhood in Mesa, Arizona. Now in Mesa, Arizona, at the time this picture was taken, that house was valued at about $180,000. That was just the real estate, $180,000. The business, so the RCFE business, and it's called something different in Arizona, the business itself was valued at $150,000. So the business is separate from the real estate. So if you own the real estate, You can own the business, operate the business out of that real estate, or you could start the business and sell it to somebody else, keep the real estate and lease it back to them. You know, Lori, what's interesting is you can sell the whole kit and caboodle for 25 million, but you might be able to sell just the business for 10 million, keep the real estate and have a long-term lease back to them for decades. So you can do that with a single family home as well. The location. That blue circle shows the location. The one thing I want to point out in this one, convenience. Notice the highways, north, south, east, west. It's conveniently located. A lot of times I get a student who comes up and they say, Gene, I got a house. It's huge. It's beautiful. It's brand new. And it's in the middle of nowhere. Well, middle of nowhere is not going to work because the person who's making the choice of the home, the son, the daughter who's making the choice for grandma or grandpa or mom or dad, they don't want to drive an hour and a half to get to that home. They want it to be conveniently located to them. So it is conveniently located, but that home, I know that area, it's kind of a level 2 home area. So the rates there are that $2,000 to $4,000 range. So now let me give you another example. Here's a level 4 or 5. Now, this is one of the homes that we put together. I showed you a picture of the interior of this a few moments ago, but this home itself at the time was about $1 million. The home itself, once we got done with it, we bought it for about $1 million. Actually, we bought it for about 800. We put 200,000 into it. We were all in for about $1.1 million. That was at that time. And when we did it, we had an open house. People came in and said, this is the nicest home we have ever seen for residential assisted living. And I said, well, I'm sure there's nicer ones out there. And now I know there is. They're my own students. Because when we do the training, many people from around the country come to the training and say, I'm in an expensive market or a cold market. They're in Minnesota tonight, freezing their buns off. And they're saying, why don't I just do a home here in Arizona where it's nice and warm and the houses are big and less expensive and single level? You can. I now have dozens of students who own dozens of homes all around me, and many of their homes are what I call level 6. They're off the chart. They're every amenity, every feature they've done. I just did an open house with one of my students on Saturday afternoon, and it was phenomenal. I loved everything that he had done to the home. But again, location is what I'm teaching you. So the green circle shows where this house is. I want to point out 3 features on this one. The highway on the right. It's less than 2 miles off of a major highway, so it's conveniently located. The airport in the center. That's not the Phoenix Sky Harbor Airport. That's the Scottsdale Airport, where the golf tournament was this weekend. It's just north of that. So all the G5s, the private jets, the big money, that's where they come in and out of. The Carolyn Golf Club is one of the top in the entire nation. And that green circle all around it are hundreds and hundreds of homes and thousands of people all in an upscale area. So that's what I'm looking for when I talk about location. It's the demographics, not the ocean front, not the riverfront, not the mountaintop. That's where the rates are in that $4,000 to $8,000 range. And the higher up you go, that's where we want to live. So we're talking business as well as the real estate. So far, we've really only talked about the real estate part. Now let's talk a little bit about the business side. 5 keys to success. The location is one. The second one is your team. Now, this is important. I did a podcast today, a gentleman in the UK, and one of the questions he asked me is, what's one of the most important things in business? And my response was your team, the people around you. I think as a solo entrepreneur, and many of us are that or have been that in the past, we think we can do it all. We think we're the only ones who can. And what you realize after you bring other people in, good quality people, is you can get so much more accomplished with quality people around you. But in this industry, I'm going to lay out the numbers of people that you need and who you need. But I want to back up. I know some of you are saying, Gene, I don't want employees. I don't either. So my next question would be, how many of you want to do everything yourself? And if you're smart, you're not raising your hand right now. So now, how many of you want to have employees now? Yeah. In order for you to grow and expand, you have to have people that are on your team that are willing to do all those things that you don't want to do. So let's talk about the team. And this is on the business side. This is where the real money is made. And I want to introduce this concept of the 3-legged stool. If you have a 3-legged stool and one of the legs goes away, the whole stool goes down. In fact, if one of the legs is too long or too short, the stool is going to wobble and eventually go down. So the three legs that we're concerned with are the business, the residents, and the staff. Those three legs, they're all equally important. So if you're just all about the money and you don't care about people, this is not the right business for you. If you're all about people, you got a massive heart and you're willing to go into debt or lose money every year, this is not the business for you. It's an equal weighting of business and residents, and the staff is right in between. They are people, but it is also business. So your team, I've mentioned that. Who are they? The first person, your administrator. Now, different states have different names for it. It could be manager, administrator, facility manager, whatever the qualifications are. And every state is uniquely different. California's, for instance, if you want to hire somebody to be an administrator of your RCFE, it's a pretty low bar, believe it or not, in California. 21 years old or more, a GED or higher, and then a 24-hour course. You can be a manager of a RCFE. I don't want to be a manager. I don't want you to be a manager. We hire those people because that's what they do. I want to be the business owner. And before I do any more, I know some of you, you're still stuck in your head. You're saying, Gene, hold it. If a caregiver calls off, I don't want to go in and fill in the shift. Well, would the owner of McDonald's go in and flip fries if the fry cook couldn't make it? No, the manager, the administrator in this case, would be the one to go find the replacement, or they would do the job. The owner probably is never going to hear about it to the end of the month or the end of the quarter, if at all. See, if you're in the mindset of I have to fill in if somebody doesn't show up, you're just limiting yourself. That's your limiting belief. The administrator is a very important person in your life. That person, they're the ones who are going to be basically operating the business day to day. Now, this is a picture of one of my former administrators. Her name is Mariella. When she came to us, she was a caregiver for over a decade working for other people. She came to us as a caregiver. She became an assistant manager or a house manager. She eventually became the manager. She was managing 3 of my homes. And I remember sitting with her and I said, Mariella, what do you really want to do? And she said, well, Gene, I would love to own my own home. And my response was simple. I'd hate to lose you, but how can I help you? I want to pause for a moment. Doing good many times is helping other people. Those caregivers becoming managers, those managers becoming owners, and maybe that person is going to be a good operational partner for you. Because I know what you're thinking, I don't want to be there every day. She does. She's not going to be a barista or a waitress or a store clerk or something else. She loves seniors. That's what she does. So I helped her finance her first home. I helped her finance her second home. Her third home, she did it on her own. She no longer works for me. She now owns her own homes and operates. All I asked her to do is make sure your assistant is ready to take over when you're ready to move on. So the administrator. Underneath that, the caregivers. Now, these people are incredibly important to everything you do because they're face-to-face with the residents and the residents' family. Those caregivers are also getting paid the least. They basically get paid minimum wage plus a couple of dollars. Now, don't make that a hard and fast rule, but if minimum wage is $12, they're getting paid $12 to $15 an hour. They're not doctors, they're not CNAs, they're not nurses, they're caregivers. They've had some training. They love seniors, they love what they do. The interesting thing is most of the caregivers come from 3 different geographic locations. They come from the Philippines, Romania, and North Africa. They love what they do. They're excellent at what they do. They may have been a nurse in the Philippines, but when they come here, their nursing degree doesn't translate to the US. So they are caregivers here. So we have really nice and well-trained people that have been with us for a long, long time. I want to make this comment too. Some of you are saying, Gene, I would have a hard time finding good people and keeping good people. Well, guys, if you ever had a business and people keep quitting or moving, it's kind of a revolving door. It's not them, it's you. And I'm being blunt because here's the deal. They're going to work for somebody. The question is, why don't they want to work for you? Why don't they want to work within your team, in your business, in your atmosphere? It's not them, it's you. Be an employer of choice. It doesn't mean you have to give them full health insurance or pay them a whole lot more. They're not mercenaries. They want to be respected. They want to have growth opportunities. They want to know that you care. And if you understand that, we've had caregivers with us for years and years and years. They tell their friends to come and work with us. So we don't have a problem finding great caregivers and retaining them because we operate properly. I just wanted to throw that out there because I know that was in some of your heads. The third one is the clients. So who is the client really? And I'm going to tell you right now, it's not the senior who lives in the home. They're not the client. They're not the ones who chose the home. They're not the ones who write the check every month to pay for staying in the home. The client is really the family. The family, those 50, 60-year-olds who have chosen the home and they're in that home, they're choosing the home and they're coming and bringing the check every single month or making sure it's direct deposited into the account. Those are the ones you want to make sure that you find, you attract, you satisfy. The seniors, they're living in the home, the caregivers will take care of them, but this is really your client, that family of. So now, 5 keys to success. We're now on to number 4, which is getting paid. So the question is, where does the money come from? Now, I said to you earlier, I do not do Medicare and Medicaid. The federal government gives money to the state. The state creates a program. They say if you're of a certain age, have a limited income, limited assets, we'll top it off and we'll pay up to $2,000 a month. Let me explain. If that senior says, well, I'm getting $1,200 from Social Security and $400 a month from my husband's widower's pension, that's $1,600 a month. That means the state of California is going to say, we'll pay $600 on top for a total of $2,000. Now, if the average in America is $4,300 per person per month, and all they have is $2,000, they're not going to be staying in a very nice home. It's going to be a very substandard location with not as well-trained caregivers, with not as good food. It's going to be a bad place. So we don't deal with that because we can't be profitable there. I'm not running a charity, although we do have nonprofit status in 2 different ways, but we don't focus on that. The next one's subsidized by the VA. Now pause for a moment. If you're a vet, thank you. Truly, truly, truly thank you for your service. I really mean that. But you have benefits. You can go directly to the VA and they will provide capital for you. But they'll pay you that money and then you can choose to pay me, the homeowner, or you can hire caregivers to come in. I can't go to the VA directly. And if I say all I'm going to work with is vets, well, most veterans are male, most women, most people in care homes are women. We're just limiting ourselves to too small of a market. So somebody is a vet, they're welcome, but I wouldn't have a vet-only home. This next one, long-term care insurance, I've got it in gold because this is a golden opportunity. Now, here's the deal. If we were in a group, there's 60 or so of you there right now. If I had you raise your hand and say, how many of you have a long-term care insurance policy? About 10% or less of you would raise your hand. The other 90%, I'd ask, well, what's your plan? What are you going to do? You're going to say, I'll let the kids figure it out. Yep, we'll get there next. But the 10% that have that policy moving into assisted living today, number one, they probably have had that policy for 30 or 40 years. When they bought it, it had a 0-day waiting period, it had a lifetime benefit, and it had a cost of living rider. So the $100 a day benefit that they bought 40 years ago is probably now $300 a day, which means if you know that, you can charge that insurance company that $300 a day because that's the maximum allowable amount. And there is no limit to how much they'll pay or for the time they'll pay. Now, current policies for long-term care are different. They'll be for 2 years, maybe 5 years maximum, up to a certain dollar amount and no more. But the ones that are in the senior homes today and for the next 10 years, they're wonderful. But less than 10% have them. So where does the money come from? The cash that senior has in their bank account, their retirement accounts, their investments, their home. And after all of that is wiped out, all of that is liquidated, then they let the kids figure it out. And then the kids who are 50 and 60 now start rating their own retirement account, their own kids' college education fund. And that's a sad thing. That all could have been avoided by doing what I already told you to do. Get at least one of these homes for yourself. So you or a loved one can move into the master bedroom and live for free instead of sucking away that future inheritance for the kids over the last few years of somebody's life. 5 keys to success. And the final one is the systems. So when I say the systems, just like a franchise has systems, you should operate in systems. So anybody who's been doing business for any period of time, you do things consistently a certain way. And hopefully you're tweaking things to make it more efficient, more effective, easier to do, and more profitable. But systems that you need are everything from the real estate itself, how to locate the right real estate, how to acquire it, what renovation to do, what renovation not to do. That's one of the big mistakes that people make when they don't come to our training or learn anything in advance. They make a bunch of mistakes, spending a lot of money on all kinds of things that they simply didn't need to in their care home. The next set of systems, the team. We already talked about who do we need. So we need to identify them, train them, and retain them. So we have very specific strategies for exactly that. We know the exact personality type, where to find those people, and how to incent them to stay with you for the long term. In addition to that, systems regarding operations. Now, I don't spend a lot of time on that here because those aren't the things that I'm going to do. It's not the things you're going to do. Those are the systems that the manager is going to do. So policies and procedures, if this, then that, emergency plans, menus, schedules, those are all the things that the manager needs to know how to do. So I'm the business owner. I rely on that manager to follow the systems we have in place, and they do. The next one is funding. There's 7 different ways to fund your project, with or without your own money. SBA loves these projects when you have an experienced operator or a trained operator or somebody who's got a consultant. The funding itself can be 100% funding or even more than that, or it could be a part of that. But frankly, I want the numbers to work even if you were to pay cash for the real estate, the renovation, and the business startup. But the funding, we teach people how to do that as well. And the last one I want to mention is partners, because you may want to do the funding part. You don't want to be the operations partner. That's fine. There's people that will do that part. Or you're the operator and say, I don't have the money for the real estate. That's fine. There's people that will do that too. The key is to identify those potential people and match them together. And that's part of what we do as well. Now I'm going to throw out this concept, a 3-pack. One home can be enough for you financially. But if you got your systems in place, you're the owner, you're the business manager. I still want you to make sure the money comes in and the money goes out. You can have more than one home. And when I say 3-pack, it can be 6 homes or 5 homes, but 3 homes within 30 minutes is a 3-pack in our world. One manager can go see every one of those homes every day. The caregivers can be shared throughout the homes. The economies of scale of products and services can be bought once and then transferred over those 3 homes. All of these are themes and concepts that we teach at our 3-day training that we do for people that want to get up and running quickly. And I know some of you are saying, Gene, what if I just want to own the real estate and lease it to an operator? What do I do? Well, your solution is you want to become a preferred real estate provider. Now, when I say preferred, what that means is you know what the operator knows, you know what they do, you know how to find a good one. So I'm going to lay that out for you right now. If you want to become a preferred real estate provider, the idea of getting twice the fair market value, rent, and long-term low-impact tenants with little or no maintenance, I'm going to lay out a formula for you. You might want to make a note. This is a formula that you can use for, frankly, anything that you invest in, but I've tweaked it specifically for RCFEs, or assisted living in this residential setting. It's called the OLO formula, O-L-O. And I'll break that down and unpack it. Opportunity, location, and operator. So the first thing is, whenever you're making an investment, the question is there opportunity here? So when I say opportunity, the question I have is there even a need for it? You might come up to me today and say, I just invented the best typewriter ever. No need for it. I just invented the best landline telephone ever. No need for it. Senior housing, you see the charts, I've gone through it. The need is here, and it's getting bigger and bigger and bigger, like a silver tsunami coming to shore. The need exists. The second piece is, what's the current demand? So when we say current demand, we know very specifically the percentage of seniors, how many of them will need assisted living on average throughout. So once we know what the current demand is, how many seniors within, let's say, 30 minutes of the location that you've chosen, now we want to make sure that the fundamentals work. Can I charge enough that after all of my expenses, there's still profit? So when I say, can I charge enough? Well, I've gone through examples for you. You've seen exactly where I've gotten the information from. So whether it be in San Jose or whether it be any place in America today, those numbers absolutely work. We have students all over the country doing this, and you can do it right there too. So the location. Demographics. When I say the demographics, what you're looking for is me, somebody who's 50, 60 because their parents are 80 and 90. Somebody who's higher income because I'm not looking for welfare and Medicaid and Medicare to pay for the care. I'm going to take care of mom and dad and spare no expense doing it. So the demographics in the area, the current competition. We talked about the current need. The current competition means how many other facilities, how many people like Lori are building something in that area. And if 159 beds are being added to the market, how many seniors are there to absorb those open beds? Now, the current competition is big box. That's what I call 80 or above, or the residential, the RCFE. And then the final one is the future opportunity. And we're right back to how many people, what is their age, and the percentages of, we know how many people will need assisted living and basically for how long on an annualized basis. So then the final piece, and again, I've gone through some of this with you. Level 5 is at the top, level 1 is at the bottom. And by the way, some of you may recognize that home on the top. That's Rod Stewart's home in Beverly Hills. So maybe you've been out there, maybe you've seen it, but it's not a care home. And on the bottom, that's a trailer park in Dothan, Alabama, a tri-level trailer park, not a care home. Again, just an example to give you a visual representation. I had to say that just in case somebody was wondering. So the third piece in the OLO formula, we talked about opportunity, location, and now operator. And frankly, this is the key part, because if anybody is asking you to invest, or you want to, in this case, lease your property to an operator, we want to make sure they've got past experience, and that's the best if they've got past experience. That's why when Mariella said that she wants to open her own home, I knew she had 14, 15 years of experience. She worked for me. I knew her intimately. And I said, please just train up your assistant to make sure they can take over as the manager. So past experience is my first choice. Second choice, somebody who's trained and supported. So when somebody comes to our class, I train them. I know what they know. I support them. I know who's going to be supporting them and answering their questions. We opened a franchise last year, Majestic Residence Franchises, and that itself, again, has training and support, but you can't do it your way. You got to do it our way. And then the third piece is and by the way, when I say the training, we do classes, like I said, 8 times a year. We do them in Phoenix, Arizona, as well as virtually online. I'll tell you about that at the very end. You will want to participate in that. When people come out to the live classes in the past, we've been able to go visit the homes, go through the homes. Now we do virtual tours, which has worked out phenomenally. Because when we did it in person, we could only see 3 homes in a bus tour. Now we can see 6 or 7 homes across the country. We're going into the homes and being able to see it that way. It's worked out wonderfully. So the virtual tours are great. So training and support, and you need to have an alignment of values. Let's face it, you don't want to invest with somebody you don't trust, you don't like, it's not an alignment. But if you're all about the money and they're all about the people, that's not quite it. Or if they're all about the money and you're all about the people, that's not quite it. There has to be an alignment of values. So the OLO formula is a great formula to use when you're looking to invest in, or whether you want to be that preferred real estate provider, the opportunity, the location, and the operator. For example, here's my friend Lo. He started off as a student, came to the class, did his first home, second home, third home. Now he's got 2 96-bed projects going, one in Texas, one in Louisiana. I'm an investor in his projects because I know him, I understand him. He's a great operator. Carla Lee, she came to our training in her 20s, no experience with real estate or business. She left the class within 5 months, had her first home. Within 3 years, she had 9 homes within 3 years. She ended up selling them all. Now she works on our team to help support new students coming through. Donald is a luxury home builder in Kansas. His wife, Talinda, very supportive. And Donald said, I've been building beautiful homes for other people. I'm going to build my own residential assisted living home. And that's exactly what he did. Mitch and Jen, they've got 7 homes. Actually, they've got 9 homes now in Colorado. Patty, she's got a 6-bed home in California. Wendy, their family has 4 of these homes in Florida. The Gillis family here, they just have 1 home. It supports their entire family all working together. Anita and her friends in Texas, Shams and Anisha, they live in Canada and they invest in the US in the residential assisted living. My good friend Sean, he now has 2 of these homes. He just bought a lot of land where they're building 2 more of these homes on that same plot. He'll be at 4 within the next year and a half. Brad, he's a builder. His wife, She is a nurse. So what a great combination. Angie's a nurse, Brad's a builder. Brad's like, I'm going to build this home. So he built this home, and I'm going to tell you, you can see it right there. It looks less like a home and more like a lodge, right? So it's not a big box facility, but it's also not a small, cozy home. A lot of land he had available there in Kansas. So he built a huge building right there. And as soon as he built it, he filled it. Then there was a waiting list. So he went back to the bank and said, I want to build another one. So one of the things they did was they went right back to where this building is, and they said, we're going to value the building and then the business separately. So the building, he had close to $750,000 in equity because he built it, prices went up and so on, but that's the building, the real estate. The business alone, the cash flow it produced, the appraisal from the bank was $1.4 million for the business alone. 1.4 million. So he built the next building. That business is valued from the bank, their appraisal, at $1.8 million. So just the two businesses alone, besides $1 million in equity, those businesses are worth $3.2 million. And he's now in construction on his third project, and there's no reason for him to stop at all. Rocky and Sherry, they've got 3. Their goal is to have 100 of these homes, level 6, the nicest of the nice, package them together and sell it off to the hedge funds. The big guys do want to get into our game. They figured it out with COVID that the big facilities are not nearly as safe as the small home. Their building has 35 people going through the door every day. Ours might have 2 caregivers going through the front door every day. Smaller is safer. They know it. They're trying to figure out how to get into our game. They've been trying to become us for years, but they've always said, oh, it's too small. You're too small. I'm telling you right now, you have 100 of these homes with 6 beds or 10 beds or 16 beds. They are more than willing to write checks for hundreds of millions of dollars because that's what scaling does. The 3 best ways to participate, the 5 keys to success doing it, the OLO formula if you want to be an investor. You can definitely do this and make a lot of money, even in your area there, even if you do it small or if you do it bigger and nicer. You can do it in any location. So at this point, you just have to ask yourself, well, does this check my boxes? Is this something I want to do? And these are the things, this is the way I think, does it give me certainty that I'm at the right place at the right time? The seniors are coming. You can't fight it. The next one, significance. I mean, I want to do something important that is significant. I'm helping people. Does it give you significance? Unlimited income potential. Not something that puts a ceiling on you can only make just so much, like whatever it may be. You can do as many of these as you want any place in the country. Doesn't require you to work 40 hours a week. The caregivers do, the manager might, but not you, the manager. I'm sorry, you, the owner. In addition, does it provide financial security in a downturn? Here's something that has been proven this year in unbelievable fashion. This is the place to be. No caregiver went without work. No manager was fired or left off. They didn't close us down and say you have to wear masks and you can't come in. Our homes are full. And as a matter of fact, people are moving out of the big homes into the small homes because they are safer, as I said. So the idea of in a downturn, a lot of people got slammed in the last year. We have been growing, and we're just getting started. Connection to a family. We call it the inner circle, the ALFamily. All of the people around the country who are doing this with a like mind, supporting each other, getting together on it. And then ultimately the ability to build and pass on a legacy. My 4 kids who work for me, I didn't ask them to come. They came to me and said, Dad, we see what you're doing and we like it. Everything else you did in the past, we weren't interested in. They didn't say that, but this, they're saying, this I get, this I understand. And they can do it for shared housing. They can do it for senior housing. We've just touched the tip of the iceberg. Now, I've gone through some information here, but I know at this point, some of you are saying to yourself, wow, I mean, this sounds pretty neat, but how can I learn more? So I'm going to spend the next 7 minutes with you, and I'm going to tell you exactly how you can learn more. I'm also going to give you an incredible opportunity, and I want to encourage you to take advantage of it. I'm going to put it on the screen. You're going to get a code word and a website, and you can check that for me, Lori. I got that given to me, so we'll make sure it's right. I went to it myself. It did work, but we're going to pass on a huge opportunity to you. In the past, the only way that you could learn how to do this from us and the REL Academy was doing a home study course. That information was recorded in the past, so all of the newest, latest, greatest wasn't a part of it. But the home study course was good, but then we started doing live in-person trainings. We're still doing live in-person trainings. Our next one's coming up in March. Those live in-person trainings are a great experience. People love them. As a matter of fact, there's people who say, I don't even want to come to the virtual. I just want to come to your live experience because they want to get together. And if that's you, that's great. And if you're not comfortable with that, I've got a solution for you. We do virtual trainings. The virtual trainings have been phenomenal. It's a live training either way you do it, and it's always the latest and greatest information. That live virtual event has been phenomenal, and we have people from all over the country, even all over the world, who attend those trainings. We can actually do a lot of social interaction. The virtual tours are phenomenal, and each event is a live event. My entire team of 10 people available to you as your success support during that entire 3-day training. And what you'll learn at that 3-day training is everything that you need to know, including the best opportunities in your area for doing this. How to determine if a property is right for doing this. How to attract investors. I've helped people raise over $50 million for these homes in this residential setting. How to attract investors, how to find the right people so that you're not working hands-on. How to fill your home quickly. It's one thing to build it, it's another one to fill it. Laura and Brent in Texas just opened up their home. We did a virtual tour with them a few weeks back. And they said, Gene, we have 4 people on the waiting list just waiting to move in as soon as our license goes through. As soon as it went through, boom, within a few days, they had their first 4 residents. Other people build a beautiful home and then they say, now how do I get people to come in? We teach you how to fill that home and how to do it all with or without your own money. Now, if you have money, that's great. But if you don't have money, that's fine too. My first project, when I was 18 years old, I had no money. I had no choice. My first residential assisted living, I had plenty of money. I had lots of choice, but I still did it no money down because then my money becomes the backup plan. And how to do this on a fast track. Get your first home in the next 3 to 6 months. Imagine one of these homes within the next 6 months where you've got that kind of cash flowing in. That's what can bring you to that financial security that many of you have been looking for. So the in-person classes are fantastic. Whether it's in person or online, you're given the RELS certification through the National Association. My goal is to come and visit your home. I'd love to come to your open house like I did just this past Saturday. That class itself, whether it's virtual or in person, is $5,000 to attend. Gene, why is it so much? Well, a lot of reasons. One, we don't want everybody there. We want the right people there. I protect the people that are there because they're higher level. They're serious people. They're people that are more than likely already been doing some real estate. They've already been doing some business and they see the opportunity and they're not just looking for a quick buck. They're looking for being at the right place and they want to avoid mistakes. They'd rather learn from my mistakes than their own mistakes and they're smart enough to do it. So that $5,000 is the price. Now, you know that I'm going to give you a huge opportunity while we're here. Now, I'm going to give you first what we would normally do as a discount. Then I'm going to give you the price that we put together with Lori for the SJREI, and it's for you, and it's going to be good for 24 hours for you. So normally it's $34.97 is what we discount it to. In addition, if you're coming virtually, you're welcome to bring a partner, bring the whole family. We would love them to be involved with you, so have them participate in the training. If you come to the live event, we do charge $1,000 for that second person because we feed you like it's a wedding banquet for 3 days, frankly. So between the food, the drinks, the beverages, and the fun, we charge an extra $1,000 for that partner at the live in-person event. But I'm going to give you something. And this is something I highly encourage you to write this down right now. Use all capital letters for this code. SJREI GENE. All caps, just like it looks right there. The website to go to is this one here, https, and you know this website, it's your guys' website here, sjrei.org, then put /Gene, GENE. When you go to that link right there, it's going to take you to this page. And on that page, it says right there, it's the $49.97 for that 3-day event. There's a promo code that I'm going to want you to put in. That's that promo code that I just gave you. And when you put that promo code in right there, hit the button that says apply. You have to hit the button that says apply. And when you do, it's going to take that price from $49.97 and reduce it. It's going to reduce it all the way down to $24.97. That's a 50% discount. That's an additional $1,000 discount that others don't get. but you do. And when I say bonus for taking action now, it is good for the next 24 hours. That code word is there. It'll be ready for you for 24 hours from this moment on. So make that decision. Now, you're not even sure what the date is, whether you're going to do it virtual or in person. I got that. Don't worry about that. Lock in your discount first. We'll find a class and a date that works for you. The virtual class, you can do that from the comfort of your own home. The live class is in Phoenix, Arizona. So it's an easy flight from where you are to where it is. I stay there too, even though I live right nearby. So I'm there with you the entire time. So that $49.97, using the code word that I gave you of SJREI GENE, brings it from the $49.97 down to $24.97. That's a phenomenal opportunity that I want you to take advantage of. Now, I've got two more things for you that I'm going to give you as additional take action bonuses, but we're going to cover a lot of ground during those 3 days. And a lot of times it's not really the information. That's kind of like the bricks. It's the mortar between the bricks that hold it all together. So even though I've shared some things with you, it's the questions that you ask during the breaks or hanging around at night after class is done, where we get to talk and we talk about those personal issues, personal things that you're facing or you're looking for information on. That mortar between the bricks with our entire team, including me. In addition to that, we're going to go into detail on the 3 best options and the 3-legged stool and everything that's entailed with it. That 3-pack, the how it's done, the where it's done, the why it's done, all of that is part of that 3-day training. I've introduced the themes to you, including doing good and doing well. I want you to do very well financially, but I want to inspire you and encourage you to have impact. Do something for people around you. I turned 60 just a few weeks ago, and every day seems like a gift now. I'm not going to be, who knows if I'll wake up tomorrow? Who knows if you'll wake up tomorrow? For me, that's not a bad thing. I know where I'm going and everybody will be fine who's left behind, but you get what I'm saying. Don't put things off till tomorrow, what you know you can do today. So again, your success is up to you. I'm not doing it for you. Lori's not doing it for you. It's up to you to take action. But knowledge is the key. And you know that we've touched the tip of the iceberg here tonight. The more you learn, the faster you go, the less mistakes you make, and you could have avoided if you simply had somebody who's done it before show you how. We're going to cover a lot during those 3 days: case studies, the virtual tours, deal crafting, how to create your business plan. We have the largest SBA lender in the country call us because we created the business plan for one of our students, and they said, "Who are you guys?" That was the start of a beautiful relationship. We work hand in hand with them today. We'll show you how to raise capital and how to attract money, because frankly, you can't make money unless you're creating your own form of Bitcoin today. All you can do is attract the money that exists. So we'll show you how to do that. We'll show you how to locate and work with angel investors and private lenders and all of that at a huge, massive SJREI discount where you're getting 50% off. Now, I've given you the code word. You've got it all there, and I've got 2 more bonuses for you. So the first one, and again, I want to make sure you see that code for the next 24 hours is available to you starting right now. You go to that website anytime, it's available to you right now. The second bonus is Blueprint, the book. This book right here, I'd love to give you a copy of my book, Blueprint. Happy to sign it for you as well. That's one bonus. But this next one right here, Blueprint is great. But this next bonus I'm going to give you right here is a very cool tool that we created called the REL Profitability Calculator. I always shorten it to RELPC, but the Profitability Calculator is a very cool tool that will allow you to look at a property and analyze the business quickly. So you can put in the numbers, you'll see very quickly the profit that you can make, and should you have private rooms or shared rooms, what would you charge, how would it work? This tool we put together is a gift we're giving to you as well for those of you who get registered here tonight. So I've laid it out for you. You've got a $1,000 additional discount above and beyond what we would normally do for anyone else. That's for SJREI. There you go. It's for you. You got the Blueprint book and the REL Profitability Calculator, and it's all available to you right there using that code SJREI and Gene, all in caps, SJREI-GENE. You go to the website, sjrei.org/Gene, and everything is there for you to give you that massive discount. Now I went through, I'm right on time where I wanted to be, so I left plenty of time for questions and answers. But I want to thank you, first of all, for allowing me to share this with you. It's a passion of mine. We have a mission. We've got a goal. We set the goal 3 years ago, 1,000 homes in 1,000 days, and we hit it. Our new goal is to help 10 million people across the country. I can't do it all on my own, and I'm looking for people who want to be a part of that, helping those seniors across the country as we're doing good and doing well. So thank you for allowing me to share. Thank you, Lori. I appreciate that. And thank you so much, team. It just says team right there, so I don't know who else is there, but
Yeah.
Jeff, thanks, Jeff, team Jeff, a team of one. But thanks for letting me share. I do appreciate that. And I'd be happy to take any questions. If somebody has some, they can just go right into the chat box and we'll take those questions. That'd be great.
All right. So all of our SJREI members, please go ahead and enter your questions into the chat and we'll get them over to Gene. That was amazing. And you hit on so many points of truth as far as that we're all heading there. We all have parents that are heading there. And,
yes.
And I definitely can see how having the right area, the location is critical because, you know, you can get a McMansion even here in California, but it's not going to be in the right location.
Right.
So,
right. Yeah.
All right. So we have our first question. Can we convert hotel rooms to assisted living? You
can, but that's not a residential assisted living model. So you can, but now the question is, who's your competition? Because here's the fact, Lori's project is going to be brand new, out of the ground, a beautiful place. Do I want the hotel that I got for free from the city that's in the bad end of town that needs the asbestos removed, new plumbing, has 8-foot ceilings, and I got to walk across the parking lot to get to the dining hall? Probably not, because I don't want to compete with Lori on that footing. I'd much rather say I do something different. I've got the boutique versus the large country club that she's building there.
Okay. What are the zoning and permitting requirements to convert a home into the RAL?
Every zoning is always local. So something that works in San Jose might not work in LA. So it's very local. But in general, you know as well as I that, first of all, the state has rules. The state of California, the rules are no limit. Most places will say 6 people in that home unless you have, and now start to name things like sprinklers, fire suppression, etc. Your local area, they may say if you want to have more than 6, what you need to do is you need to invite everybody in the neighborhood out for a meeting. That might be problematic right there. You might need to get certain permitting in order to convert a garage into bedrooms, etc. So it's always local, local, local. I would go to where it's more friendly than it is more problematic and find the place where the numbers work correctly, work well.
Is the licensing, does that come from the local municipality or from the state?
It's local, but it's through the state. So again, it's administered through the state, but the state, they don't, it's not federal, it's the state, but it's still done on a local basis. So your home needs to be, there's really 3 things you need. Your home needs to be senior safe. That doesn't need ADA compliant because we're not hiring people with disabilities to take care of somebody who in essence has a disability. So it's not ADA compliant, senior safe. The doors have to be wide enough in case somebody has a walker or wheelchair, grab bars near the toilets and showers, smoke detectors, potentially sprinklers. The second thing is policies and procedures. So most businesses would call that standard operating procedures, the documentation the state requires. And then the third piece is a qualified manager. So again, California, pretty easy, 21 GED, 24-hour course. Other states like Arizona, it's a 2-year process. Either way, I'm not going to do it. Don't want you to do it. We're going to hire somebody who's going to do that for us. But those are the 3 elements of what you need.
Awesome. So you kind of touched on it. What sort of retrofitting might somebody have to anticipate doing?
The most expensive one that you probably will do is some work on the bathrooms, because most homes have bathtubs, right? And a bathtub for a senior is not really a good thing. So probably taking out the bathtubs, putting in a smooth roll-in or walk-in entry to it. That's one of your main things. Grab bars. I take out the carpets and put down either tile or linoleum or something that is easy to clean, smooth, not a trip hazard. I widen doors as much as I can. You may end up converting some space depending on the time of the home. The garage is the first place I would look, a porch, or putting on an addition. Just depends on the size of the building that you have. But those are the type of things you're commonly looking at.
Now, I noticed in the one that you showed us, the picture in the I think it's Scotts Valley, it was a very open floor plan. Did you design it that way, or was it already open like that?
That was a pretty big opening already. The one thing we did, it's hard to tell without it being in front of you, but there was a doorway that went into the kitchen. So we just opened that all up. So the whole kitchen, which was probably 30 by 15, we opened that all up into the family room, which was probably 40 by 30. So it was really big space, and they're not usually like that. That's not my favorite home out of our homes. My favorite home, you walk in and it feels like home. It's just like, it's like I could live here. Yeah. So the big ones that are really open, I know it looks good, but a home is more like a home.
So once an operator gets licensed, are they limited to being licensed in that state? Or can they take their license from one state to another and operate nationally?
No, it is unique. Each state is different. And Arizona has some of the strictest rules of every state in the country. Many states, it's much, much less, a lot less training, a lot less qualification. But it's, frankly, let's face it, a 24 hours of training, 21 years old, a GED, that's a pretty darn low bar. When they come into our facility, though, we train them at a much higher standard because that's the state's minimum requirement. We want them trained at a higher bar.
Makes perfect sense. So talk about the exit on the RAL. Like once you get it set up, how long does it need to season or run to have revenues? And then who is, I mean, you mentioned a little bit hedge funds, but who is really the buyers of the RAL?
Yeah, I tell you, if I had 10 of them available right now, I could sell all 10 of them. And the thing is, people will come through our class literally, and they'll be asking, are there ones for sale? The ones that are for sale right now usually fall into one of two categories. One, they're too small, the wrong location, not profitable. They never should have been open. Don't want that one. The second one, it's incredibly profitable, but somebody's asking way too much money for it, right? They're asking $1.5 million for it when really it's worth $300,000. So those are the two that you might see on the market. The best deals are going to be off market. They're not listed. They're not on the MLS or LoopNet or BizBuySell. Somebody knows somebody. It's somebody who's been in the business for a while and is retiring. But I think what you're alluding to is the fact, hey, could I build the building or retrofit it, start the business, and then sell it? And the answer is, oh, yeah. And if you want to be that person, you could kind of flip it and make a few $100,000 that way. But I think the better way to do it would be to sell the business, keep the real estate, lease the real estate back to them for a long, long time. And if they don't have the money for the whole business, take a down payment and take an income stream there. So I've done that 3 times where I've sold the business, kept the real estate, wonderful cash flow, wonderful tenants. It's funny, I'm sitting here at my desk. I've got an envelope with checks in it. They send me the checks in advance so I can just pull them out and just cash them at the beginning of the month. And it's a wonderful day on the first of the month.
You know, Gene, I mean, you make a really good point, and I think a lot of people don't think that way. You know, we just recently bought a restaurant and the restaurant business, and then we sold the business on a seller finance terms to somebody who's now paying us rent for the restaurant, right? So we separated the two. So you're doing the same thing. You're putting the business together, and then you sell the business, and we sold it on terms. And so we get cash flow twice. We get it on the business and the rent.
Isn't it fun?
It's awesome.
I know it is fun when you do that.
Hey, you know what? Seller financing and that kind of stuff's not available around here.
I heard your story. I got that. The 1.9 million. Nope, you can't do it.
Can't do it. Nope. All right. So the next one we have is I have 6-bed house being used for Airbnb. How long does it take to convert to an RAL in Santa Clara? Any idea?
Yeah. See, what's really interesting is in the state of California 3 years ago, if you were to call them on the phone and say, I want to get a license to do this, they'd say it's a 2-year waiting period. And you're thinking, what the heck? Why? Because they're didn't hire enough people. They're underfunded, the whole bit. But really, it wasn't a 2-year waiting period, which is ridiculous. Short story, 2 to 4 months is what it should take. But the way to do this quickly, if you follow the state's rules, here's what they're going to say. Fill in the paperwork and mail it to us. Don't do that. Fill in the paperwork and bring it to them and say, sit with them. And you're going to sit with what's called the surveyor of the day. That's somebody who's an inspector who goes out and sees these homes. You're going to sit with them and say, look, I want you to review my paperwork to make sure I've got everything that we need before I submit it. So they're going to go through it. They're going to fix that 1 or 2 things that if you did it the way the state says, mail it in, they would then write you a letter saying you need something. You're going to get it back and say, I have no idea what they're saying. Try to do it, bring it back to them. They're going to say, nope, you got it wrong. And that draws out the process. So doing it my way, fill it in, bring it in, tell me what I need to do differently. What is it here? And once it's all filled in and ready to submit, then say to that person, that surveyor of the day, hey, let me help you. Do you do the inspections? Yes, I do. Today's my office day. Well, do you ever do inspections in this area where this house is? Well, as a matter of fact, I'm out there next Tuesday. Well, since you've already done this part of the inspection, the last step is just come see the property. Let's make it easy. If you can just put mine there, before you know it, you're at the top of the pile instead of the bottom of the pile. That alone in your state could easily save months and months and months of silliness.
Now, with COVID, are they still allowing you to come in person, or is everything over the phone, video chat, walk them around with the phone? I mean, what are they doing with that?
Every place is going to be a little bit different, but I love the fact that they're willing to do it that way over the phone or Zoom or FaceTime and so on, because, hey, they love it too. It's one less thing they have to do, makes it easier, because the reality is what they're really checking is, number one, is your home properly sized? Are the bedrooms the right size? Private rooms have to be a minimum of 100 square feet, 10 by 10, that kind of thing. Shared rooms, 160 square feet, 80 square feet per person. So those are the minimums, by the way. Please go higher. But the point is, are your rooms the right size? Do you have your paperwork in order? Your policies and procedures? They may say, send me a copy of that if they're not going to come out and see it, which you probably can get, or have a digital form, send it to them. And wouldn't it make sense for the state just to provide the policies and procedures? Yes, it would, but no, they don't. They make you create it, and then they tell you to follow your own rules. So it's kind of nuts. But I love the fact that the virtual inspections is what a lot of places are doing, even here in Arizona. It makes it faster, easier, quicker, and especially if you do it right. What they're really trying to do, and everybody, I want you to think about this, these inspectors, the state, the rules, regs, really it's set up not to be a pain in your butt. It's set up to protect the seniors. They want to make sure that you're going to do a good job. You've got a nice home. You know what you're doing. So if you come in and you've got your I's dotted and your T's crossed because we've shown you what to do, it should be smooth sailing. If you come in and you don't know what you're doing, you're asking a lot of silly questions, that's where they're going to heavily scrutinize and nitpick and check your water temperature and that kind of stuff.
And that's where having that education, you know, as I mentioned earlier, you're going to pay for your education one way or another. You can either earn it, which is going to be the cost of the School of Hard Knocks and the time that goes with that, so you lose time and money, or you can invest in yourself and learn it, which is much easier, right?
I love that. But the one piece that you said where it's going to be cheaper if you earn it, and my thought was, no, it's not. Because it costs so much more time. Just just write the check. If I can write a check, I want that. I want speed. I pay for speed all the time.
Yep, I will definitely pay to learn it instead of earning it, because earning it takes too long and it's too painful, for sure.
Graduate.
Yeah, that's true. You have to go back.
Well, you quit. You never follow through. So
yeah. Okay. So one more question. You keep saying 6. What if you have 2 people that are from the same family? Does that go up to more than 6?
Well, again, in California, you can go above 6. I just wanted to lay it out if it were 6, and I want you to do more than 6. But if you have 2 people, let's say it's husband and wife, they're still 2 individuals. The one caveat would be this one. Let's say you're the owner and it's your mom or your dad or your mom and dad. Well, they could live in the house and you just don't have them registered as residents within this, right? You're not charging them. You potentially could have them living there and have 6 other people that are registered in. So that would be a different scenario. But if you're just talking, the 7th person is the spouse of one of your residents, no, that would be a 7th person.
And what if you have 2 parcels? Like, okay, so California's got all these rules, right? So we have ADUs, accessory dwelling units. So you have your main house and you have your granny flat or ADU in the back, and that has typically 2 bedrooms. You can get them, in the certain areas up to 1,000 square feet, 1,200 square feet. More likely 850 square feet, 2-bedroom apartment. So you've got your main house and that. Can it be one facility without having to go through all the requirements of more than 6 people?
Here, I'm not sure how the state would look at that, but here's what I would do, because you guys, that's a huge opportunity for you guys. What I would do is I would put, and by the way, you said 800, maybe 1,000. Is that total or is that per one of those units?
That's just the back unit. Then you'd have probably 1,800 to 2,200 square feet for the front unit.
So the reality is I would definitely put that unit in the back or whatever it may be. And if they're not a resident in the home, but they're more of an independent living, so they're independently living, because keep in mind, they're not connected to the house. So they're not sharing the kitchen and bathrooms and family room and so on. They're somewhat independent. That would be awesome, because you could rent it to that senior that needs less care. Think more Golden Girls, but they can come into the house, walk into the house for food and fellowship, etc.
For activities and everything like that, but yet go back out and take care of their own.
Any home size, even if you had 16 people, I'd still be looking to put some of those units on the back if I could. We don't have that in Arizona. There's a few states like Cali that does have that. I would definitely be looking at that. That's a huge opportunity.
Yes, and to my SJREI members, in case you guys have any multifamily and you haven't looked into this, you need to be looking at ADUs for multifamily too, because some of the municipalities have opened up what they're reading the regulations to allow as much as 25% of your density in conversion. So like if you've got janitor storage, you've got garages, whatever, let's say you have 20 units, you can have 25% conversion attached. So you can go and take the laundry room and everything else and add in there. And you can do 2 more detached ADUs. Wow. So you can increase the density quite a bit of current multifamily that way. But on the homes, you can do a junior ADU, so you can convert the garage, and a detached. So yeah, I think that there's definitely opportunity for, having those different living scenarios. That's why I was asking about, can you stack people in there and the front house, and for sure.
Good. Well,
okay. One more question here from CB. If you have any last questions, let us know. Otherwise, we're going to wrap it up. So CB asks, is there a state that you feel gives the best ROI?
If you were to, I'm going to answer it differently. What's a great state to do business in? Texas. It really is. They're business friendly, 20+ million people, major cities, everything is there. They got every amenity, cool place to be anyway, warm. So for assisted living, it's really a no-brainer. And that's Dallas, Austin, Houston, San Antonio, El Paso. I'd stay away from those 2. Not that you can't do it, but it's just growing. It's exploding. That's always my number 1 state that I pick for that kind of.
You picked that over Florida.
Yeah, because in Florida, when you think of Florida, and those of us who've been there, you got Southern Florida, which is, the Miami and Fort Lauderdale area. That's where the most of these homes are in Florida. But most of them are either very poor or very rich. So they're in very low end areas or very high end areas. Most of them are 6-bed there, even though you can go up to 21. Because again, people are lazy. They think like mom and pop, well, I'll just have 6. I get them 1 caregiver. It's like, no, hire 2 people and make it 12. Let's do business here. But if you're going to do Florida, Tampa, Clearwater, St. Pete, Sarasota, so that West Coast is your top area. Jacksonville would be number 2. Then I'd go Central Florida. The downstate, so Miami, Fort Lauderdale would be my 4th choice in Florida.
So you would do the Tampa area, huh?
Yeah, the rates are really good. You can do larger homes there. There's a lot of things there besides the storms blowing through every year or so. That's the one negative part.
Oh, okay. Well, we got a flurry of questions coming in now.
Well, now's your chance.
Yeah, so parking requirements, probably not many parking requirements. And is there a density limit in Houston?
First of all, most of these seniors themselves don't have cars. It's very rare for them to have cars. Local, everything is local. Some local places will say you need every bedroom needs a place to park a car, etc. Some places you can park in the street. It's no problem at all. So it's always very local on parking. You mentioned density. Some cities will say you can't be closer than a certain distance to an existing home or something like that, but not all cities. I don't know Houston off the top of my head.
Okay, good. Would a 14-unit multifamily with 2 floors and having elevators work for REL?
It can work for assisted living. It wouldn't be residential, though. It would be more of just what it is converted into. And I would always look at it, I'm sure you do too, Lori, it's what's the highest and best use. So the highest and best use, it might be independent living, right? We make it senior friendly and make it independent living, but assisted living is unique. We don't need separate kitchens. You need one kitchen. So automatically, if I've got units, each one has a bathroom and a kitchen, I'm wasting a lot of space right there. I don't need all those kitchens. I might either do I might do either just senior housing, independent living, or something where maybe even condominiumize it, sell it off, use the money and buy in a different location.
Right. Yep. I'm with you on that one. So talking about your class, does it provide training on how to become the owner, the administrator, the caregiver, or all 3?
I'm not training you to be the caregiver, and I'm not training you to be the manager. So I'm going to teach you how to find the real estate, operate the business, how to find those people. I don't want you to be those people. All right. So that's the key there. I'm not teaching you. I don't want you to be a manager or the caregiver.
Okay. So if somebody just wants to be the investor, should they be doing the full training?
It would be best if you did. And the reason why is because, one, you're going to learn what that person should learn. You know, that operator, what they're supposed to know, what makes a good one. Plus, you're going to be sitting literally next to people that you may click with them. And it's like, all right, I like you and I want to do business with you. I'll buy the real estate, you be the manager, or you be the co-owner and you operate the business. But I think just there alone, you gave such a great primer at the beginning of mistakes to avoid and be patient, all those different things. And I'm thinking there was so much gold in what you just shared, that piece, 15 minutes, and it was just gold after gold. And I'm thinking, somebody spends, let's just say it's $3,500 to come to our training, which it normally is, and 5 days of their time, a day to travel in, a day to travel back, and they put themselves in a hotel. So they've got 5,005 days time. Oh my goodness. You avoid one stupid mistake that might cost you $50,000 or knowing who to hire or not hire, or what makes a good manager and the personality type. All those different things that you learn in that environment that you simply wouldn't learn, or you'd learn after the fact, after you made the expensive mistake. I don't know. My time's too valuable. I can't afford to do that. I'm not going to be around long enough.
I get you on that one. So is there any benefit to providing living space for the caregivers as well as the seniors?
So a live-in model, the idea of having the caregivers live in there, some of the advantages, hey, they're not going to be late for work, right? So that's a good thing. Some people will be attracted. It's like, wow, you're providing that living space for them. So they're there for work, the living space. Here's the 2 caveats and where you need to be careful, right? Number one is that if you're going to have somebody who's there 24/7 and say, look, you sleep 8 hours a day or 8 hours a night rather, and you're off duty. Well, what if the senior needs help at midnight? And if they have to get out of bed, now they don't have 8 hours of uninterrupted sleep. now you may be in a different position where instead of paying them a salary and a place to live, you're now not paying them enough because it doesn't cover minimum wage plus overtime because of that. The second thing is, what if you want to fire them, say goodbye, but they're living in your place and that was part of their compensation? That wouldn't be a fun situation if they didn't want to leave, because now you got somebody who you want to fire and they're still living there and saying, well, I'm not going to leave. You got to make me leave. And yucky.
Yeah, that can, especially in California, that gets messy because we really can't evict anybody anymore.
Well, that's, you know, and we didn't even talk about the whole, well, I won't even go there. Sorry. You're right.
Okay. Okay, so this is our last question tonight, Gene.
Okay.
Is it possible to do a 1031 exchange and purchase an REL, or purchase a home and convert it into an REL? Because there's the business and the real estate piece. So talk a little bit about that.
So a 1031, think like kind. So real estate, but real estate to business, I don't know if that would pass mustard. The way to get around that would be, let's just say it's, I'll pick a number. It's $1.5 million. It's $1 million in real estate and 500,000 for the business. And you want to do the 1031 exchange. It's possible you could say, I'll pay you $1.5 million for the real estate and $1 for the business. And that way you've got the full conversion that goes over, and that's going to also help you on the way out as well when you sell it, because you're in at a higher basis. But I'm not an accountant or an attorney. I'm not giving you legal advice, and neither is Lori.
Exactly. Check with your CPA, make sure that that's going to work for you, but that's typically how those get kind of structured with that. So awesome. Great content tonight. I love it. It's an awesome model. We'll be in contact shortly.
Great. Hey, thank you again. I truly do appreciate the invitation, and I know it's special because you only bring in one person a month. And I hope it was helpful to all of you listening. And if, you know, guys, seriously, you're going to get involved one way or the other. So if I can help, I'd love to be a part of that. Thank you for having me on, and remember to do good and do well in everything you do.
All right. Thank you. Bye, everyone. Have a great night.
Thank you.
Later.